Welcome everyone to the Kindle Report. It's nice to be back. Thanks for all the nice happy birthday wishes on Twitter and on the YouTube channel. Appreciate it. Had a great day, great dinner. So we're back at it. And somebody said all it takes for the markets to get hit is for me to not be here. I've been talking about what's happened yesterday and continuing today for a while, for last week or so, where we're really looking at heading back towards that 40-day moving average. Didn't know it was going to do it almost in one day, but it was pretty exciting. I'm going to show you the database, which was quite amazing. Those of you that have WaveTech, you already know what this looked like when you went onto the dashboard. So it's crazy numbers here. And I've been talking about, I thought the database would start a rotation. We were at nearly 80%, 75% the other day. And I thought we are going to get back to maybe, 62, 58%. Well, even more than that, almost overnight. And it was overnight. So I'll get into that for a few minutes, in a few minutes from now. But anyway, what we're looking at here, folks, is a very interesting scenario. Of course, we had Apple and Amazon come out, and I was looking at Apple earlier today, and I'm coming up with like a potential target at 170, which can't bode well for the S&P if Apple's going to roll over that hard. We'll see how this all plays out. I won't cover Apple tonight, but maybe on Sunday I'll look at some of these stocks here. But I think Amazon's up 5 or 6%. Apple's down 3%. Obviously, a little bit of a balancing act there. So today we found out the BOE, the Bank of England, raised rates 0.25%. Everybody's in line and in step with what the Fed's doing. So that's just continuing. So we've been waiting all week for this next event, which is the employment numbers to come out. And they're expected to uptick a little bit to 3.7 from 3.6. The jobs are supposed to be around 200. And all the other metrics are pretty stable is what everybody's expecting. And maybe we don't get that. Maybe the Fed finally starts to get some of their softness in the employment numbers. We saw the claims come in at 227, but continuing claims did uptick to 1.7. So I think they'd probably, a number I've talked about in the past is 2 million. And maybe that's a reasonable number to watch. I think as long as we stay under that, it probably isn't material. But that is a situation to keep an eye on. I'm looking at just a couple other economics that came out. No one really cared. We did see at least a reasonable attempt at a rally off the lows today. I'll cover the numbers, but we did get right down into almost, I think, a perfect S2, which is around 0.4 on the S&P. I'll go through that here in a sec. But we had factory orders come out a little better than expected, 2.3. And then we had, let's see where we at here. ISM non-manufacturing came in at 52.7. It was expected 53. And then we had also productivity up 3.7. So that's a good number, because last month we had a real negative number. To me, that number means more than probably everything else on the planet from that standpoint. So we had, I guess, in the last day and a half, we've managed to retrace very, very quickly and heading towards some of these key numbers. And I probably will just keep it fairly short. I got a little late start tonight, had an issue with some technology. The camera wouldn't come up, so I finally got it to work. But I'm just going to keep this fairly brief tonight as we come into the end of the week, set up expectations. And then on Sunday night, when the dust settles from this week, we'll see what kind of metrics we have to look at. I want to see the intermediate database. There's a whole lot of things out there that are unknown at the moment. And I will go through the database output of yesterday, today. Okay, remember, we're I'm lagging a day because of the time that I'm doing this stream. The models are actually just started running just a few minutes ago. So let's go ahead and get into the database review and just get into the broadcast. I don't see anything really to say other than these numbers that are coming out tomorrow on unemployment numbers will be impactful. They'll probably come in as expected. Maybe they miss, or maybe they're better. No one knows. But I think I'll be able to build some expectations here because we're pretty close to some of these support levels that I've been talking about. So let's go ahead and get into the broadcast. Hard to believe, but we're all the way down to this is 53% here on the daily, 53.23. And if you look at the numbers here, we actually had 6,318 sell signals for this morning. So a lot of stocks rolled over yesterday, and that's a big deal. Wish I knew what the numbers were today, but we could be challenging the 48% level when we get the stats from tonight. So that's going to be, I think, the thing to watch. If we're much under 48, if you've been around this channel for a while, you know the magic number is 42%. And this was a very quick rollover. And we've seen it's been kind of interesting because this database just continued to grind up all the way up into the 80 percentile range. I was talking then that I thought we were going to get a rotation. Typically what we get is a more methodic rotation, not a dump like we got yesterday. So that tells us a little bit about the characteristics and that the selling that was happening out there was broad-based. And that's the other thing it tells you. That's a lot of stocks at 6,300 plus stocks. That's a lot of symbols to get a exit signals on this. And so that tells you it was very broad-based. I know everybody tells you there's only 7 stocks running the markets. That's not true. There's a lot of stocks got hit yesterday. So what I'm looking at here right now is I'm going to go over to the weekly for a second here and just look at this. Looks like right now we're 76.55. We're currently trading just around 45.30s, 45.50. We'll see how we close tomorrow. That shouldn't be material, but that will also tell us when we get those numbers tomorrow night. It's going to tell us what's going on here with some of these intermediate trends. I've been going on and on that all the intermediate trends are very substantial from the standpoint of this ongoing forward-looking scenario. And so the patterns that are likely to come out of here could see us come back into maybe even get some rotation here on the longer-term database back to around 76% or so. If I come over here and go to the All Stats page here, you'll see that we've got a long ways on the weekly right now. The duration fulfilled is only about 31% of the forward-looking expectations on the database. So that will tell us that there's a fair amount to go. So we could see markets start to consolidate. And that's what I've been talking about for a while, that we're going to see a consolidation up here. It's amazing that we got to 4,600. I remember going back multiple months ago, and there were some fib targets back there around 46.20 plus 46.50. It's amazing that we were able to print those numbers, and now we're starting to see the possible setup of consolidation more on an intermediate level. And I've talked. I'll bring them up briefly just so you can see them. But the scenario that I'm going to look at is still fairly bullish looking forward, but with a rotation or some type of consolidation to occur here. All right, so we'll start with the S&P. This is hourly. It looks like we've got this set just to consolidate. All of the moving averages are projected to cross over around the London Open tonight. All the algos are suggesting that we could start to trade back above those averages. That's not very high at 45.30, maybe up to 45.40. There was some resistance. We got a spike in values up to 45.44 intraday, and then on the final hour. So we did see some volatility in that last hour. We had an outside bar, but it's not significant in its formation. But it does look like the algos are saying that we should trade up back toward this 40-hour moving average. That's going to be 36.40. We'll look at the market grid here next on the daily. Just real quick here on yesterday's action. The S1 was 45.11, S2 of 45.98. So it looks to me, okay, hang on. I need to do something here. I'm going to take that. I got to take off a couple of things here. Okay, this will fix that. Apologize. Amazing. Just skip one day. You're rusty already. All right, I'll get it straightened out now. So we look at yesterday. I'll get you better numbers actually here now. Yesterday's value, we got down 45.06 was S3, and then 44.97 was STX. And when we look at where did we get yesterday, we got down to 05. So basically it was an S3 print. We bounced off of there pretty hard. It was actually a pretty decent rally. That's where we rallied all the way to 40 there. So it was about a 35-40 handle run off of that low. And the algos on the hourly were pretty spot on there when that was all happening today. We look into Friday here. What we're looking at now is R1's 45.32, R2 45.44, which is right in that range I was just talking about, getting up in there. R3 56.67. I would probably go possibility of R2, which is a retest of that spike high on the hourly that I was showing you. S1 45.10 is probably the number. S1 R2, and we may actually be able to see maybe an expansion off of that level. Now, one of the things that I've been going on for days about is that this 40 period moving average was going to come into play. And right now that number is $44.83. It is going up about 4 handles per day. So we're going to be just right at, and I was talking about this day before yesterday on my last broadcast, is that we should see that number rise up around that 45 handle. Should be, maybe it prints a little bit below and down, but we should see it stabilize here, and that will project probably some type of rally here. And you can see on the 10-period moving average, on a weekly, it's a little bit lower than that. We're looking at right now at 44.63, and it's going up 30 handles per week. So when we come in on Monday, Sunday, we'll see this value will be roughly 30 handles higher. So right around 44.93, and we've got a ppm of 0.70. Even though, and this is something I've been talking about, we're starting to see the projections on the algos that momentum's going to bleed off here even on the weekly. So there is, I would say, right now I'm just going to put it about 40% that we end up going to the 21-period moving average. And if we go a couple weeks out, that's potentially down into a lower 44 handle, maybe even 43. But my expectation is that we'll get a bounce right around this 40 or the 10. We should bounce off of that. It's high enough probabilities that we should not get through that. But if we start to consolidate that number, if we go out just a few weeks, if we go into early September, all of a sudden that number is like 44.08, 44.50. So that could be ultimately where the lows would be in this pattern. If we get this sideways consolidation, it would actually be very healthy from the database viewpoint to get everything to rotate and stabilize. We start to see maybe the daily start stabilize and get some traction back in again. And then we would see the weekly just back off a little bit, maybe clean out some of the older stocks that came in early in the cycle going back to the beginning of the year. If you remember, the intermediate database first started buying in a significant way back in October a year ago. So a lot of these symbols, typically it's about a 200 plus day hold, 220. So that's about 1 year in market days. And so some of those older trades that have been on for a while are getting very mature and likely to start to roll out. So we could see that, maybe see some other rotation in there, but we are like 75% bullish on the database. So there's not a lot to pick from. That last 25% is usually probably bond funds and other things that aren't going to get bought anyway. So, but you can see we traded down. It's interesting, just since I have the weekly charts up here, the STX number was 45.02 for the week. And that didn't seem like very likely when we started the beginning of this week. So we are sitting here right on STX. So if we closed under 4,500 today, it doesn't look very possible, but if we did, that would be an STX buy on a weekly basis. I think that would just set the tone for this consolidation. It looks like no matter what, whether we extend a little bit down or not, we should be able to go. Now, somebody's saying no sound. Okay, I saw no sound. I always panic. It should be fine. But the bottom line is this angle of attack should be strong enough to hold the markets down in here. Maybe we dip into a 44 handle, but we should see a tradable bounce out of here somewhere. And whether that's Apple stabilizing, I guess Amazon's up, like I saw somebody suggest that it's up 10%. So we're just really the first signs of any kind of consolidation. This is what I've been kind of going on and on for days, market stalling, looking for all of this stuff to start to happen. And, that will probably be the scenario here for the next several weeks. Like I said, if you just look at the algos are suggesting, like I said, that we're going to roll over, and there becomes some reasonable significance that we could trade down into a 21-week moving average. Like I said, puts us down. If it happened quickly, it would be in a 43 handle, but we could see a 44 number. I suspect this maybe 44.90. I don't think we get much under that for the moment. So here we go with the NASDAQ. Still got the weekly up. NASDAQ PPM1 is through its first second derivative. That suggests that we will trade through this 10, but it's still got, once again, it's a 0.74. So that means we bounce. It will take maybe another week. Next week is when we would actually be able to get there. And but we're just going to have to see how this configuration sets up here. Let's go to the daily. We'll fine tune it a little bit here. Here we are in the 40. You see the 40, everything is projecting that this is going to weaken even more. And I don't see, like I said, the only thing I'm going to go with right now is that 10-week moving average has a strong enough angle of attack that it will likely hold around there, maybe print through it and then bounce. We probably don't close below those values, so make sure that you're tracking those values on there. All right, so we're trading right along the 21 here on the Russell. So on a relative basis, it hasn't had quite as steep, at least. It's starting to stabilize a little sooner here around this 21 day. You can see the algos are suggesting that there's going to be some more weakness. I think the worst we get down to, number I've been mentioning for days, maybe 1940, 1930 on the Russell. I just don't see it getting much below that level right now. But the algos are suggesting that momentum is bleeding off, that at least there's a consolidation, not necessarily signaling, not at the moment, any kind of major decline. If by chance, and going back to the database, if by chance we blow through this 42 mark on the daily, then things could get a little ugly. And so if you're trading any short-term stocks, you probably should, especially if you're a WaveTech user, if you have it on daily, you're probably seeing a lot of stuff getting blown out. Like I said, there were 6,300 just yesterday. I suspect there's more about to be revealed here in the next hour or so. So just know that the short term is definitely becoming vulnerable. If you're institutional client or utilizing the intermediate models on WaveTech, what you're going to see here from that standpoint is you'll probably see some of these stocks pull back, but they should hold their key averages and things in the pattern. So this 10-week moving average will probably be pretty dominant through a lot of symbols that you might look at. All right, now for the fun stuff. It seemed just a couple of days ago we were talking about these fib targets here. This is a daily targets of 431 on the 10-year. I'll show you here just briefly. But if you look at the analysis I did on the yield curve a couple of days ago, I told you what's going to happen is the front end isn't going to go up as much. We're going to get what's called more of a flattening or a steepening, but the curve is going to end up, I would call it just a flat line across the entire spectrum. A little bit of a blip on the upside on the really short stuff on the short treasuries, 13-week, 6-month. But once you get out to around the 2-year, you're going to see that just flatten out, and then the 2, 5, and the 10 are going to be somewhat normalized around the same values, and the 30 will have a little bit higher print. I think we saw the 30 was at 4.3. So that's an exact configuration that I showed you the other night when I was drawing in what my expectations are. And that will be, I think, how we probably go into the fourth quarter when we start to get toward the year end, squaring up of books and everyone looking at what's going on. I think that's how the yield curve ends up printing. So we could see a bit more, maybe even a 430 on the 10, for closer to 450 on the 30, and then the 2 probably staying fairly flat and the 5 up just a little bit. So just expect that yield curve to start to do that. So I know that there's a lot of folks out there. It's kind of sad on Twitter, especially. I do have to. Something just came up for me when I was talking about that. Let me come back up on screen just for a minute, because I want to discuss this for just a couple minutes. Okay, so what I want to discuss is, if you watch a few minutes of any of these analysts that are coming up, and even money managers, people like that, everybody's telling you that there's amazing value in the long end of the bonds. Okay, that, folks, I'm telling you, it's not hard to be good in this market. Just turn on that, just fade these people. I mean, every one of these money managers and people like that come on different shows, I know on CNBC, everyone that comes up on Bloomberg is saying the same thing. Well, we see a lot of value in the long end of the Treasury, of the bond market. Man, please don't listen to these people. This thing is going to have more upside, and there's not going to be a lot there. Because why do they think that? Because they're still hanging on to that recession idea that they've been promoting. And whether, I'm just telling you, there's enough problems out there. Now we're seeing the Treasury ready to refinance. They're going to have to bid that back in. That's going to have to get a little more attractive to get these folks to buy these long bonds. So there's not going to be any advantages for a while. And as I was showing you, and I'll go back to the charts here in a minute, but as I was showing you, is what we're seeing here is that long end of the market's really starting to look really, if you're owning those things, they look really bearish, and yields look like they could go a bit further than a lot of folks think they can, and then they're not going to come down, and they're going to stay up there, and maybe we start to see some cracks in some of these other elements. So I'll just go through. I'm always a real-time analyst, so I'm looking at things as I'm getting information, and then I'm asking the hard questions, like, if that happens, what does that mean? Do we start to see the economy slow down? Are these things going to happen? At the moment, I don't see it, but we're going to watch the data really close. Now, this is the thing that people are always telling me I'm wrong or whatever. Guess what? Had 6,300 sell signals yesterday. The models that I've used for all these years that you folks are now get exposure, and to the ideas that come from this, they don't miss this stuff. We were selling huge in January of 2020 before anyone knew about the pandemic. We had already moved to anywhere from 30 to 40+% cash on our institutional accounts. The models see this stuff. I'm always being told, well, you need to look at this and that and the other thing. Listen, everybody's looking at it. It's all reflected. I'm a pure quant. Everything's reflected in the pricing of the markets, and that's why we start to see what we did yesterday. Like I said, normally when we see a database get up to 80% like we did on the daily, we see a methodical kind of unraveling where the market rotates and we get down from 80 to 75, which was where we were, and then we go to 68, and it's somewhat methodical. Anymore, we just get these big dumps. We get these big tranches of buys, we get big tranches of sells. This has become very typical over the last couple of years. So let's go back to the charts, and I want to show you on the 2-year what's going on there. All right, so as we look at the 2-year, you'll see exactly what I'm talking about here. Look how flat it is. We have, even more interesting, we have fib targets on the upside, fib targets on the downside, but look at the algos. They're just flat, no acceleration. I'm going to go back to the 10-year real quick, just so you can see the difference here. Look at the algos here. Everything's sloping up, increasing yields. I showed you this the other night. Back to the 2-year. Completely flat. So this is what's going on is looking out. We look like a flat of the 2-year. I said the 13-week, the 6-month bills, the Fed funds, all of that's going to be elevated. You're still going to be 5.25, 5.5. That's not going to change. But once you get into the 2-year, you're going to see this start to happen. And I don't think there's anything to read into it at the moment other than this is part of the Treasury refinancing that they're going to be doing. And all of this stuff is going to start to change because they've got to move up. They borrowed a whole bunch of money up front, 6-month T-bills. Everybody wanted them, 3-to-1 auctions, blah, blah, blah. But now what we're seeing is we've got to get some longer-term debt in. So you got to get out 2, 5, 10, whatever, 30s. You've got to find a way to sell these things. So if you're a bond salesman, the only way you can sell bonds is to give better yields. So there's a really good reason why we're going to see this. They're going to load up that back end, and that supply is going to knock bond prices down and yields up. And that's how we should start to see this thing unfold. We'll see how tactfully they do it. If you recall, there was supposed to be a huge liquidity crisis when they were going to bring this money back on. So maybe no one's talking about that. Maybe there ends up to be a little bit of liquidity crisis. So we'll have to see exactly how this plays out. But to me, just looking from a pure quantitative technical viewpoint, we're going to see front end, the 2-year is going to stabilize here. You can see it flat. The 5s, 10s, and 30s, that part of the curve is going to start to continue to move higher. Maybe it's up in the 4.5 range even on the 10, but 4.25, we're almost there. 4 3/8, that's certainly a possibility. So we'll do crude oil next. This is daily, a big reversal. Looked like things are going to sell off yesterday. Saudi Arabia comes out and said, oh, by the way, we're going to cut back production. And so they're going to keep these prices. They're going to do everything to keep prices higher. Although it still looks to me that we end up somewhat stabilizing. But look at this. We have some Fibonacci targets. And every time I tell you folks all the time, these fib target indicators are so good. You can't ignore this. So the minimum target here is 84.10, 88.03, and 90.45. I don't think we get up there. It looks like the algos are trying to stall here. This is on a daily, but when we go to weekly, it's a much different picture. Once again, those intermediate charts are telling us a little bit more, but the current fib targets on the upside is around right now 82 to 85 is where we're trading. We should stall right in here, but it looks like we'll continue to climb higher as we go all the way into September, maybe into early October. It looks like that upward slope is going to keep us in that direction. Now we could trade down to those values, which is way down at $80, 79. We certainly could come back into that range, but for overall, this thing is just intermediate charts are going to dominate here. All right, so Peter Schiff's not going to be happy about this. We got a big reversal going in gold, and so we're at 1970. I've been talking about these numbers here. it looks to me that we should be able to hold right in here around this 1960 level. If we get below that level, then we'll probably potentially coming all the way maybe back into 1920, even a 1900. So we printed as high as 2010, and now we're just seeing sellers over. We can't seem to find any buyers. Let me bring up the daily here real quick. The daily, we get this little spike. We had some fib targets here. Now we have some downward fib targets, and this will help us fine tune this just a little bit. So we're looking at a downward target, low target 1, 1962. We're basically there. 1944, 1933 are the three targets to watch on the downside. Should probably stabilize down here around this 40-period moving average. And the algos are completely flat, no real upward momentum, at least for the next week or so. So we're going to be probably just treading water here. All right, so on Bitcoin, we'll start with the daily. And so we're just seeing some volatility. We got a reversal a couple of days ago. Now we got a reversal yesterday, and now we're starting to see a little bit of stabilization. But that number that I've been talking about at 28.5 still is holding pretty well. We went down there and bounced off of there. Let's go to the weekly, because this is right where the weekly support is. Yeah, 28, let me just bring up some values here. 28,947, the next level 27.3, and then 24,385 is the extreme down here. But I think we stay right in the range of the market grid on the weekly. And you can see the extreme ranges that are here is for right now. You can see 28,611 is S2, then 259 is S3, STX is 27,943. We should stay within this. This is a weekly market grid number. R1 29.5, probably the cap on this market for the moment. But if you look out in the expectations here on the algos, everything's is stabilizing around this range. So it's interesting, not seeing any big sell-offs or anything else being indicated. Okay, folks, that's going to do it for tonight. So thanks for coming. Thanks for being patient while I was celebrating my birthday, and should be fairly solid going forward. There's potential hiccup next Thursday, and I don't think there's going to be much going on that I'm aware of at the moment until maybe November. So I'm looking probably doing an international trip in November. I'm not 100% sure just yet, but it's starting to become a little more in the focus, but I'll only be gone for about maybe 10 days, something like that. So anyway, thank you so much for all the happy birthday. I had a great day, actually. It was really good. We had a great time. There was a bottle of red wine involved. So anyway, I really appreciate everybody showing up and being part of this channel. And please subscribe, hit the like button, make comments, do all that stuff. Maybe we can break over this 30, I think it's 33,000. We'll just get stuck right around every 1,000 points, around 800 or so, 32,800, 33,800. You know, we just can't seem to get the thing to move. But hey, I appreciate all of you. So thanks again. And I appreciate the Smurfs, all the moderators. You guys do a great job. Haven't seen Levi around. I guess you take care of him if he shows up. Anyway, thanks again for watching, folks. We'll see you on Sunday night. Have a great day trading tomorrow. Be safe, and I will see you on Sunday. Yeah, we had to drive home, Lisa. Still is my favorite part. Have a great weekend, everyone.